I think it's a path, right, for everyone to start using AI. Everyone talking about it, but no one really utilizing it to the fact it should be utilized.
I've spent the last 20 years working in an innovation department. Innovation is anything that does exactly what you need to do in any business, which is have a competitive advantage by being first to market. We'd love to do the entire project ourselves. It takes a layer of responsibility and paperwork out when you're able to do these projects with your own capital in a smaller group of people. But it's going to have to be based on a certain factor.
Hello, everyone. Welcome to the Path of Progress. I'm your host, Alex Kononov, and today's guest is someone who truly embodies the idea of continuous growth and innovation. Join me is Miguel Rodriguez, founder of Real Legacy Investments and a leader in real estate investment strategy. Miguel's journey is a unique blend of IT, business transformation, and real estate success. From building operational efficiencies with automation, managing properties, and educating investors, Miguel has been on an incredible path of progress. Miguel, welcome to the show.
Thank you. Thank you for having me, Alex.
Of course, it's a pleasure. To start, can you share a bit about your journey, how you transitioned from IT to real estate, and what led you to the creation of real estate investments?
So, like normal people, I had a 9 to 5, which I really enjoy. And for years, I was trying to break into larger IT. I've always been around real estate. My mom early on owned a few properties and I was her handyman. So I always kind of been around the industry and in the game, but I wanted to learn how to kind of scale that, right? And the way I thought I needed to do it was that I needed to save my own money and go out and buy my own properties, right? I didn't understand this idea of leverage and the idea of syndicating or investing where I can use other people's money to scale. So, you know, not to make a long story short, when I've learned this through my mentor, Jason Yarushi, the kind of light bulb went off and, things started to pick up quickly. We fast forward and now we're about 300, 400 units in.
Wow, that's incredible. But let's rewind a little bit. Before meeting Jason Yarusi, how did you I know you have some family, right, real estate, and what was your own properties that you bought? Was your house that you lived in or your investment property?
Yeah, yeah. So the very first thing was I housed at a house, right? So I knew that I wanted to get into real estate and that I can build equity in a house and have other people kind of pay your rent. So the first thing I bought was a three-family house in the city of Newark, New Jersey. I lived on one floor and then I rented out the other two tenants.
I love it. It's interesting that we have all our guests so far that did the same exact strategies. They both started from house hacking as a go-to strategy, as something that to mitigate your risk. You live in one apartment, you rent the others, you're reducing your living expenses. And for your numbers from what you have, do you still have that house today?
Yeah, yeah, it's probably one of my highest cash flowing properties.
There you go. Because you got it in the right price. You started early, you got it in the right price. What year was that? When did you buy your first property?
That was 2016. Yeah,
Okay,
so not
very
too
good.
long ago, but yeah, 2016 is when I got the first one.
And what is your area? Where do you invest?
So I am in New Jersey, right? So North New Jersey has kind of been one of my focus areas, but New Jersey is a hard place to have high yields. So, and things are pretty expensive here, right? So while I started buying smaller two families and three families in New Jersey to get the experience and scale, we started to buy out of state. So our target markets were South Carolina, Georgia, Florida, and Louisville, Ohio. But we've exited some of those markets just because the competition is there. There's a lot of overbuilding that's going on. And you know, quite frankly, the secret's out, right? These people, or a lot of people have known that these are great places to invest. And one of the things that I kind of wanted to talk to you about, Alex, today was kind of having that competitive niche, right? So my background in IT and technology are all about gaining a niche, right? Either improving things through operations or reducing operations, but kind of just having that cutting edge item that gives your business a competitive advantage. So that's one of the reasons we exited these markets, right? It's a little bit competitive there, and we were looking for a place where we had a better competitive advantage. So right now we're in Columbus, Ohio. We are in Louisville, Kentucky, Northwest Virginia, and New Jersey. And those are our target markets.
So before we go deeper to syndications and large deals, multifamily, from your first deals, from your first, how long did it take you to find Jason Yarusi, understanding that it's not enough, that you want to develop and grow to go bigger things?
Yeah, that's a good question. So I think the journey took almost 4 to 5 years. And I say that because I originally started fix and flip, right? So the idea was I bought my property and I wanted to buy the one next door. By the way, I eventually did end up with the one next door. And I wanted to buy the one my mom lived in, but it was all around about getting income and kind of cash flow to be able to buy more multifamily. So I kind of started going down that path, learning a lot about fix and flip, construction, how to price market, how to kind of boost income with some light renos on these properties. So I was there for a while, trying to track down a property. We did actually buy a few properties and we actually started syndicating without knowing we were syndicating, right? So during doing when we were doing some of those flips, we kind of ran out of money and we had some great opportunities. So I went to friends and family and I started asking them for money to kind of complete my flips. And that was kind of the path into these larger syndications that we ended up doing, right? But I started syndicating without knowing. But overall, to answer your question, Alex, I think the whole thing probably took 5 to 7 years to get going to where we are today, where it's clear that we're in these specific markets and that we know exactly what our buy box is and what we're looking for.
Okay, so you started with a smaller multifamily, small residential space, and you started flipping the houses because flipping was sexy, right? At the moment you flip, you got extra buck, and you
Yeah.
invest a couple more, and you just keep going, keep doing it. But it ended up being not that easy, right? So everyone is promoting it as an easy way to do make money, but it becomes a second job basically ultimately for you. When you learn all this process and ropes and you wanted to get bigger, you met Jason Yarusi, you wanted to go to bigger things, to do bigger things. And how long did it take you to educate yourself before you started going after bigger apartment complexes and looking to invest out of state?
Yeah, I think it took us about 2 to 3 years after the 5 or 6 years we spent trying to do fix and flip. So, overall, like
I,
7, 8 years. So it's been a long journey for us.
I think it's important and to people to understand that it doesn't take overnight, right? It's a knowledge. You need to gain this knowledge. You need to gain this experience. And if you want to go from 0 to 100 units overnight, it's not going to happen most likely. You got to get some luck, but also you got to educate yourself and surround yourself with like-minded people, with mentors like Jason Yarusi. We're going to give him a plug here. And absolutely, I agree with you. This is something on a trajectory, on a path that we need to develop and to grow, to strive for better, strive for good, for greater good, right? Something that we need to look forward to. Okay, so your first multifamily deal, how was it? Was it an easy path? You just jumped into it, you made a bunch of money. Tell us more about it.
So my first multifamily deal or my first larger deal? My first
Larger
syndication. Which one?
multifamily deal, your first syndication.
Yeah. So like most syndicators, I hopped on with an experienced team that actually was with Jason. So I hopped on with an experienced team and I just raised capital and supported some of the operations, right? So it was light in kind of my door into being able to support him in his endeavor, right? And being able to kind of have access behind the curtain to how exactly the whole process worked from beginning to end.
Yeah, absolutely. So you learned the ropes, but inside being inside of the deal. So you contributed to the team, you contributed on going on the operational part, but you also was next to them when the operational hurdles came up to, and you learn how to fix them. You learn to overcome objections. You learn how to overcome those problems, and you learn from this process. So after that, what did you learn? How did you move to the next step? And when was your first deals that you personally, as syndicated, as an operator, as a GP, as a main person?
Yeah, so I did a few of those GP deals, right, where I was in charge or I worked on small pieces of the entire process, right? The process being, you have to go through acquisitions. So you have to find the deal and go through acquisitions. Then there's the operational piece. You need to invest or you need to find investors, right? And then at the end, you need to kind of close, right? But I kind of went through a few of those where I was more deeper on the operations. I wanted to really understand that piece of the business so that I can be my own lead, which I think is where you're kind of hinting, right? So there were two things that I wanted to make sure I knew before I did my own deal. I wanted to be comfortable that I can run a deal on my own, and I wanted to be able to raise capital. Finding deals was something that I felt I was going to be able to do naturally. I'm pretty good at relationships, and we have some pretty good broker relationships. In New Jersey when we did the fix and flip, and then out of state as we started to look. So my goal was to learn those two basic areas, and we did about 3 or 4 deals, right, where we were more just peeking behind the curtain, getting ourselves involved, understanding what it takes day to day to run a deal. And then we just kind of gradually graduated, right? We went from the process of just taking on a few tasks, maybe supporting leases, to trying to help with some of the construction and the lighter renos, to having or communicating with investors and trying to raise more capital. And just like you said, Alex, it's an ongoing progression of learning hands-on skills, educating yourself, and then eventually you become better, you have the experience, and you're able to do your own.
Yes, and I like how you mention it that you still need to wear a few hats, even if you just wanted to raise capital and support the process on investment part, but you still need to understand how to make an underwriting, right? You need to be the person who do acquisition himself to understand if it's a good or bad deal, because you can't raise capital for all the deals and support them on an investment part, on investment relationships, if you're not sure if the deal is correct, because there's many deals out there, and I on the road personally multiple deals and multiple partnerships, and unfortunately we denied most of them because it didn't work for our numbers. It was too light on underwriting, and we want to stay on the conservative side. So you mentioned your IT expertise help you with real estate investing. So how do you combine experience in IT helped you create this unique skill set that shaped your approach on property acquisition and underwriting and problem management as well?
Yeah, no. I mean, I think you again are kind of nailing it, right? It's one small step at a time with learning how to do this, right? And I was lucky because in my regular 9 to 5, I run IT projects, right, which are pretty complicated. And I run or I work with pretty big teams. So I have a lot of experience with putting together a team to handle a unique project, which kind of relates a lot to real estate, right? When you have or you're buying real estate, you look at acquisitions as a project, right? You can look at operations as a longer scale project. You can look at the value add portion as a project, right? Maybe a few projects. So that experience in IT and running projects, putting people together, coming up with clear objectives and goals, and then executing on those goals, right? And learning to adapt, trying to keep them on scope, schedule, right, and within budget, really kind of carried over to my ability to do that on a larger scale and to a different industry in real estate.
I like it. So you basically like a team lead on the project, and you categorized your project on one big project as a multifamily and operations, and you have multiple little projects there, and everyone got his own niche. Everyone has their own products that they focus on, and you have this clear vision on how to divide those and to be the most efficient of it. Love it. And it's a team sport, right? The whole syndication is a team sport, and that's the beauty of it, because you can't do everything yourself like you did in your small residential projects. But in the large syndication deals, you have a team of people who's like-minded people, but he has own strength, and now they can focus on their own little niche, what they do best, and they contribute their own expertise to your project, and they help each other to strive and to make this project the best, right?
Yeah, and you have to kind of go area by area. So you talked a little bit about how you had to underwrite to be able to understand it. And
It's about progression, right? What from one step to another, and to get to one thing, you do have to get the knowledge on another thing. And please continue your thought.
I, yeah, no, that and that's perfectly said, right? And I kind of want to tie it all together, right? But exactly when I first started doing this, or when a lot of people start doing this, that you're told to go into an area where you're an expert, right? You're really good at talking to people, so you need to focus in on the raising capital portion, right? But what I learned is that unfortunately you have to understand the entire business to be good at it, right? So if you really want to get good at talking to a customer, and if you are really good at talking and people think you should be a capital raiser, you're doing yourself a disservice if you don't really understand the underwriting and how the numbers work, right? Because it just makes you a more educated, I'm going to call it salesman, but it just makes you a more educated salesman when you're an expert on your product, right? You really understand the numbers, you really understand how everything comes together, you understand what's needed, right? And then you go into the other part, right, where people start asking you about your experience and how do you really, scale and make the numbers grow? How do you really produce value, right? And then you have to have that operational experience, right? You have to be able to speak to, hey, we added antennas on the roof and put a cell tower in, or, we did some light renos because we knew, old looking cabinetry was old, and by a simple paint, people thought that the area was more attractive, right? We put in security cameras to make it safer. We put in better water systems, right? Low water utilities, and saved a bunch of money that way, right? But if you can't have this conversation, right, it's really hard to have the confidence to go across the entire area, right? And I'm going to use all this to tie it back to like my IT experience, right? So you asked me about my niche, right? So I just kind of wanted to start there with, first of all, you need to educate yourself, like you keep constantly repeating here, and go in and understand all the areas of the business. And then you can kind of niche down in what area you want to be in. So my path was really unique because I looked at all these areas and people were telling me that I'm really good at one, but it didn't really kind of land with my heart. And what I realized is that I really didn't have a niche, right? I was just looking at the business as a regular business, right? This is what you have to do, and this is how the business is. And a lot of people that get into this, right? They want to be good operators. They want to be good capital raisers. But you need to really ask yourself, what is my competitive advantage over the rest of the people that are capital bringing, that are running operations, and that are getting deals, right? And when I started to look at it from that perspective, my whole perspective changed on what I have to do. I started to realize that not only did I need the skills to be comfortable with it, but I needed to figure out what I can add to my skills, like what else I can add to my skills to make myself or give myself a competitive advantage over the other people. And for me, that was using technology and my project management skills, right? I've spent the last 20 years working in an innovation department, right? And innovation is anything that does exactly what you need to do in any business, which is it helps it kind of have a competitive advantage by being first to market so that you can grow and produce more income, right? You have the ability to increase revenue, right? Through some type of investment in technology. Today the hot topic is AI, right? So that's one example. The other side of that is the operation piece, where you're able to reduce cost, right? Because of some type of innovation. So what I found out is that it doesn't matter where you're going throughout the main areas of what it takes to do larger multifamily is, you need to have some type of competitive advantage. And for me, that was using my IT background to kind of start leveraging some of these newer technologies to give me a competitive advantage over the rest of the competition.
Absolutely, because competition is vast. And people don't realize how, I just want to add to your point of capital raising, how hard it is, because it's not only you need to understand to be a better salesperson, to sell the project to possible investors, but investors in this space are savvy themselves. They know about investments, they careful about the investments, right, in the first place. And they will start asking you specific question about numbers and about cap rates and about net operating income and specific numbers for that property. You need to understand meat and bone. You need to understand how it's wired inside you. Otherwise, people won't take you seriously. And just come and send a post and text 100 people that, hey, do you want to invest in your property, is not enough. You need to understand the operational part of it so you can understand the projections of this underwriting model, right? Because only doing a quick math on napkin is not enough. When you're underwriting for 5, 10 year projection, you need to have now repair schedule. You need to understand what's been repaired, how it's been repaired, and how long does it take usually to do that. So you need to do that kind of background and research already to jump into the space and to talk to people on the same level. And I think it's very important for people to understand it. Don't jump into it before you're educating yourself. It's important to take first step and to go there, but you will learn quickly that you need to educate yourself better, and to get into full speed, you need more knowledge and talking to more people and networking in the space.
Yeah, no, I again, you've kind of nailed it, right? The more I learn in this industry, the more I know that I about what things that I don't know about, right? You never stop learning. There's so many, it's such a big business, and there's so many things that you think you've mastered until you met someone who's a bigger master, and then you have to kind of start continuously growing and learning about their perspective and all the years they have of experience and kind of how they look at it all. So yeah, definitely advise people to hop in, but just know that it's a marathon, not a sprint, right? It's going to take a lot of years to kind of develop your toolbox and understand where you can bring value, right? Like I mentioned, the IT stuff, and to understand the basics, right? The basic things that you need to be able to have these smart conversations and bring value to any team you decide to join.
Yeah, I agree. So overall, you participate in over 22 deals through your investment, right, history, including some impressive acquisition. Can you walk us through your process for identifying and evaluating properties in target markets? Because one time you mentioned that you started looking in the Midwest, right, in North Carolina. Now you look into a different area. So what did change? Why do you focus on Colombia? Uh, what's in that particular that attracts you? How do you identify those projects?
You want to know more about why I selected my markets, or kind of,
More understanding how you select the markets, how you select the specific market
yeah.
against the other markets that you've been investing, all the same as New Jersey, right? You still your home base in New Jersey, you do projects there, but you invest out of state. So how do you pick the market?
Yeah. So a lot of it has to do with, the number one leading indicator in any market is going to be jobs, right? So we were looking for markets that had a lot of job growth, and there's a bunch of different things that we were taking in. The U-Haul travels, right? But I mean, we were looking at markets that had a lot of job growth and had a lot of people moving to the for the job growth, and where the city was spending the money on the infrastructure to improve jobs in the area, right? So a couple key markets kind of fell into this. This cycle of markets growing is kind of something that once you start diving in, you can kind of, you kind of start seeing the patterns in the history. So, back in the day, it was the New Yorks, the Bostons, the Miamis, right? LAs. And these markets kind of went through their cycles of jobs and companies moving there and kind of building infrastructure to make them the cities they are today. And what we saw was that second wave happening, right? The Phoenixes, the Denvers, right? The Austins were all kind of coming online. The Carolinas came online, and those cities were going through that that change of people kind of moving from suburbia back into the cities, right? The cities kind of being the hub, and as the city kind of spent money and made the city really nice, it attracted people back. The jobs started to come. So once we recognized those patterns, we were in those cities, and we realized that we were competing with a lot of other syndicators, investors, larger institutional money was coming in there, and it just kind of tightened the spreads on how much we can make on certain deals. So then we started looking at what the next wave of bubbles were, right? What's my next Charlotte? What's my next Austin? Right? And the cities that I talked about, Louisville, Kentucky was really attractive because of GM, and they were spending a bunch of money on infrastructure. Some new things were coming online, but it wasn't oversaturated, right? So the jobs were coming. There was a good cost basis to buy something. And, there was a lot of quality of life in the tenants, right? They can get something for fairly cheap. So that was a good city where people will be attracted to move there. And I can say the same for Columbus. Columbus has a bunch of Fortune 500 companies, new jobs being created by the new Intel factory that's going in, and the city's spending a bunch of money on revamping the downtown area and kind of making it like a new centralized technology hub. And again, the same pattern for Northern Virginia, right? The new Amazon office moved there, right? So I think the key is to follow the jobs, right? Because people follow the jobs, and you're going to have healthy migration growth there, which will kind of reduce the inventory and allow you to kind of raise rents and kind of be in a good position to capitalize from that.
Do you have any markers like for you to invest in the area, like minimum household incomes that you look, minimum populations that you look in those city before you look into the jobs, right? Do you have some general idea of the areas that you underwrite that it would be okay to go there? Because sometimes, right, you can have some good news, the job's coming and something happens, and then you're stuck at this area where the crime a little higher than you would want to be, the income is a little lower than you want to be. So how do you mitigate your risks? Do you have any minimum criteria that you look in the market?
Yeah. So, once we pick a market, I mean, every market's going to have its challenges, right? There's going to be crime everywhere. You kind of need to figure out where, interesting enough, the path of progress is, right? So, um, the the path of progress of where the city is spending its money and where people are moving to, right? What's the new hip area that's kind of becoming gentrified or that's kind of growing and the jobs are coming there and the city's kind of partnered on making this area, a nicer area. So not so much medium income. That is a metric we look at when we're looking to raise the rents, but that's not always our strategy, right? Sometimes we just get a great deal in an area and, you know, traditional real estate, right? Buy in the right location. So we're just looking to buy in a location that's in that path of progress because we understand that the things around it are getting a lot better and are kind of growing.
This is
But some really high level things that we look at in all our cities. Number one, they have to have a university, right? So we typically buy in cities that have larger universities because that kind of powers the economy if the jobs come in and out. Number two, they need to have more than one major job, right? You don't want to be somewhere like a city, and I'm going to use Detroit. I don't want to pick on Detroit, but like a city like Detroit, where if GM were to move out, you would see a lot of job growth or a lot of job loss there, right? Because a lot of the income is based on people working at that major corporation. There's not a lot of other major corporations. So we're looking for diversification in employment. We're also looking for a hospital, right? So when you look at these areas that are growing, people want to be close to healthcare, people want to feel safe, and kind of having a local hospital, it's kind of like a double-sided win, right? You get the jobs and the people from the hospital, and you also have that extra area of like safety and protection in case anything happens to the family, right? You're close to medical. Grandma doesn't want to drive an hour to go see her doctor whenever she needs to. So we look for hospitals. We typically like to be near public transportation, right? So we want to be in an area that has rail or is connected to rail. Really easy to do in like the New Jersey markets we look at. A little bit more complicated when you move into like the Midwest, but we want to be near hubs of rail, right? Where maybe there is some type of rail line in, or there is some type of larger bus infrastructure that can bus people around. Because we know that helps. That helps people with jobs. It helps get people back and forth. And, those kind of combinations of that and buying in the right location puts you at a really strategic advantage over looking at other areas.
very interesting you mentioned it because Path of Progress actually came out from our multifamily courses, and the idea of it is I really enjoyed it when I learned about multifamily and looking for the path of progress of those developments in the area and looking for the hidden spots that people still don't talk about it, but they already have Starbucks inside, they already have Trader Joe's, which is like ideal markers for this is a good area because those company already do a ton of underwriting and analysis on their own before they put any new locations in some areas in some cities they don't have any other locations, so they bet big on this market, on specific household income, on specific growth that will come there. They don't just put those locations for no reason. There is always a reason behind it, and they much more strategic and they have much more funds to do this proper analysis on a much deeper level. So for us, when we look in this area and we have this paths of progress of those already created developments, we understand this is something that either already developed and grown or it's gonna be in the future. It's coming into this area, this growth and development on some deeper levels that we don't see right now.
Yeah, no. And again, right, back to like having a niche and kind of an advantage, right? If you're just buying to buy, at the end of the day, that's probably not a real strategy, right? But you definitely need to do exactly like you said, right? Take advantage of other companies that are spending millions of dollars on figuring out that correct path and kind of be alongside them in terms of what you're doing. It's interesting we're talking about this because kind of back to that technology edge, right? Today, AI is a really hot topic, and data, right, is kind of the hottest thing. And a lot of us are underwriting and looking at areas and putting all this information together, but we're kind of doing it one by one, deal by deal. And this goes back to my idea of, or what we're kind of focusing on, which is kind of starting the process of meta tagging our data so that when we do underwrite and we do find out that this is a good area because there's a Starbucks or something else, right? Kind of properly storing that, whether in an Excel sheet or wherever we want to store it, an Access database, so that when we look at the next deal, we have an advantage, right, over the people because we took that information we had and we're reusing it to figure out what the best place it are to buy, multifamily, and what's in the area, what's growing, right? How can we take that and apply it to, another city or a little bit away, right? In terms of, being smart about making our decisions and being strategic in our purchasing.
So, do you develop this platform now for AI to integrate in your own operations, or you building something for the math?
Yeah. So right now, what we want to do is we want to build a tool set for investors, right? Whether it's, right now we're working on like a web scraping tool that can help you kind of pick your buy box and give you a list of the deals you're looking at. I mean, you still have to go in and underwrite them. Hopefully in the future, we'll be able to kind of get that piece doing today, especially with some of these AI agents being able to use OCR, which is the ability to take information, optical character recognition, and take that information and kind of use it to analyze it and give you data. But right now, our focus is to just create small tools that help investors. So for acquisitions, we're just trying to create a list with your certain buy box to help you filter through all the noise, right? For investors, we're just trying to create an easy process for you to be able to meet an investor and kind of walk them through a high level path of getting rapport, building rapport so they get to know you. On the back end on operations, right? We're doing a lot of R&D. So, our toolkits or the toolkits we want to build require us to have our own research and development and R&D area, right? Where we're able to take new technologies, and I'm just going to use one as an example, right? Like we met with a company that specializes in leasing, right? And they're an AI company. You can they're able to improve your lease, your renewal on leases, right? Which is super valuable. We learned through our data that turnover was one of the most expensive things that we handled as operators, right? And if we can fix turnover, we kind of had like 50% of the battle kind of won, right? So it was vacancy and turnover because turns are really expensive and you lose income, right? So we started meeting with certain groups, right, through that R&D division that I'm kind of talking about, where we're doing research and development for companies because we want to figure out an advantage we can have and then kind of share it with other people, right? Because having one advantage is great, but having five is what's going to make our company unique. So we met with this leasing company and they have a way and they do research on their own to pull all the highest market rents together, and then they take those market rents and they can tell you where you should be pricing your lease at to be competitive so this person renews, right? So that type of AI and that type of technology, that type of research really helps you improve operations. So that's one of the tools we want to offer people and part of the operation kit, right? And we're going to do the same thing for closing out, right? Like kind of how do you automate some of the communications with the bank? How do you ensure your environmentals and everything get automated through AI, the Internet of Things, right? But we're really building is a toolkit that an investor can come to us and we can say, hey, if you're looking to do this, or these are your common problems that we have when we were doing our deals, and here's a toolkit that we can offer people to kind of improve uh, these pain points that we had in the market so you can kind of grow from our success.
I'm curious. You mentioned about lease, right, and stabilizing and understanding what the market lease right now on the renewal, so you have better competitive advantage over the other landlords. Now, the question is this app or your AI tool, will it help to identify what class of property it is. Because from my personal experience, even using Rentometer, right, the most common app that we use to understand the rental markets nowadays, what I face is the spread is sometimes is too big, especially the common areas, right? So we have right now most of it mom and pops, all the rundown buildings that rent for like $1,000, and we have Class A buildings that rent for $3,000 for the same one bedroom unit, and you have such a big spread, and there's not much in the middle. So how do you understand where you should price a building if you did a value add? So you bought a not a new Class A building, you bought a value add project, but you already renovated it. So you're trying to understand where to be. How this app will help you to price it. Do you have a solution for that, or it's still in development?
No. So, and I want to be clear, right? My goal is not to create the solutions. I mean, we will if there's a need and no one's creating it, but my goal is more to partner with people that have the solutions, right? There's a bunch of people that are solving these problems. The problem is no one knows whether they work or not or how successful they are, right? What we want to do is we actually want to just be an R&D division, research and development, right? Because of my IT background, and because of my project management background, I have the ability to bring in a small project and kind of test the waters. I can set really clear metrics on what we're trying to accomplish and then just kind of run it and then see that the value really come back. To do this, you need kind of a good infrastructure. You need X amount of units, X amount of portfolios, and we happen to be set up with a couple of good relationships with high-end property managers and some really large syndicators that are allowing us to use this newer technology to help them get a competitive advantage. But as a result, we'll have that as part of our toolkit. So back to your question, right? The company that we're working with, and I don't have the name in front of me. We can get that and figure it out. But they do have the data points that you're looking for to know the difference between something that has been renovated, what the tenant class is, right? But they have several data points where they have the ability to say, look, you're more of a rehab property that was built in 1990 that has nicer units as opposed to you're something that was just put up, right? And you should price your rent here to be attractive, right? You don't want to be as high as that nice place with amenities, and it's a different build. The feeling of the building is newer, right? Because the newer stuff looks newer, right? As opposed to saying, look, this is a 30-year-old or 20-year-old building, and the outside it still looks a little dated. It might have some fresh paint, but on the inside you've done some nice renovations and you're more attractive. What's the difference in these prices and where should you price yourself, right? So they specialize in that, right? I don't need to do that. They done the research, they have the data points, and you take that information and then you price it with having the ability again to meta tag your data. You've underwritten 30, 40 deals in this area and you know that the Starbucks is there. You know that it's in the path of progress. And now you know where to price your leases. You have that competitive advantage. You have your niche, right? You're able to go in there with a lot more confidence when you speak to investors, right? And say, look, we're not just swinging for the fences here without knowledge, right? We understand that, you know, this pitch is coming at me at this angle and the guy has to throw a strike. If not, I'm going to get on base, right? Just to use a baseball analogy here, right? But it's we are educated in our decision making. We are educated for our investors. It looks like we've done the homework and we understand the market. We have some type of competitive advantage in terms of how we're pricing things, and we're using all this data to give us better return.
It's incredible. I think it's a path, right, for everyone to start using AI, because it's on the mouse and everyone talking about it, but no one really utilizing it to the fact it should be utilized. I think we don't really understand the potentials there yet, and this new announcement of OpenAI that AI agents will be working to perform tasks as PhDs, that's something new, and as disturbing as it's exciting, right? We don't know what's going to happen in the future, no one knows, but I think in the short term we definitely will be able to benefit from it, and developing those tools like you doing it right now, and looking for what's available already and putting it all together as a package for real estate investors, for your own investors that will see benefit. I think definitely great value add. And kudos to you guys to working on it and keep pushing those boundaries. Well, I understand now where your total goals are. Where you looking? Do you have already around 400 units, right? Under management. You work on research and development, trying to plug in AI and simplify and improve your process of searching properties, and also managing those properties. So what's in the books for you right now after you're done with this? You work in this on a background. What are the new projects that you're working on nowadays?
So we're starting to dive into a development arm, right? So my two areas of focus are this area that we talked about with the research. You know, as of next month, we're going to have a finalized contract with a larger property manager here in New Jersey, right, where I can keep an eye on implementing some of these AI tools and kind of evaluating their value, right? Because it's a big market, like you said, people are just kind of getting into it. And because of my unique background, I have the ability to do that and bring value. And part of it is for us, part of it is we want to be able to monetize that in terms of just kind of growing the buy box and our advantage. But the other part of that, where there's a lot of new technology, is on the development front, right? People are 3D printing homes. People are building homes in sections. They're modularizing and building modular homes, right? They're building homes out of newer material, right? So, and I'm just give you two amazing examples. Not to spend too much time here, but we met with a guy that's not using wood to build framing. He's using this light composite material that's just as strong, and it's waterproof, termite proof, damage proof, right? And it's just like a vinyl product that he prints that's super strong, right? And it's super light, so you save money on shipping and you're able to install it a lot faster because you don't need five people to like pull up a joist for a floor, right? So that's an example of like where we want to get into development because we want to understand it. Back to how we started this entire conversation, Alex, right? We started with you need to learn the basics, right? So just like I did a syndication, I'm hopping into development and I'm just learning the basics, learning the tools, right? But I already kind of have it in my mind that I need to figure out what my competitive advantage is there, right? And there's a lot of new building ways that are being utilized that, we can see an advantage in terms of us being able to save a lot of money or go a lot faster in the development area. I'm working on a 18 unit development in the city of Newark, and it is to kind of get that initial understanding, the basics, get down the basics on how do you do this. We're going to learn a lot. It's going to take a lot of time, but we're already having the conversations on, how do we leverage like that composite, vinyl wood for joists and materials so that we can go faster and it's easier to use. The same thing with the concrete, right? They're building things out of this foam material and it's a lot cheaper and a lot easier to work with. And it's something that we want to see if we can incorporate into maybe certain parts of our project, right? Kind of test the waters and see if this is something that maybe one day we'll build, a full larger multifamily development with all these materials, and we'll be cutting edge and kind of ahead of the rest of the competition because we had that R&D division that helped us do this.
How do you learn about all of this new development and project? Do you constantly just looking on the internet what's going on, and you have your own search tools that keep you notified when something else coming up?
Yeah, so I mean, I genuinely have interest in this stuff. So I do, if you go into my Facebook feed or you're going to see a lot of this kind of stuff because it's in my interest, right? I kind of always been interested. My path started me with fix and flip, right? So I've always been interested in some of the construction items and how to optimize. I have that IT background, so I like the AI tools and the software and the items that can help with back end office and operations, right? And I have the project management, so I'm always interested in how do you run something more efficiently. So it's just kind of my natural being. But what I recommend for a lot of people is that they go to like a prop tech meeting. So this year I'm actually going to Vegas March 9th, March 9th to attend, one of the bigger property tech meetings where they're going to talk a lot about these technologies. In November, I attended the one in New York City, CRE Tech, right, where this is kind of all they talk about, right? They talk about the efficiencies, new technology coming into the market, and you can follow a couple of podcasts or a couple items that kind of specialize in prop tech, which is technology and property, and they talk a lot about these type of cutting edge solutions.
Very good. And let's go back to your 18 unit new project development. On what stage it is right now? And what is the timeline on it if it's not completed yet?
So yeah, it's been a long time coming. Right now, we are looking to finalize the plans and get something called resolution compliance. That's where you go out and legally take a bond out for the city, and you have the ability to actually break ground, right? Because officially you've been insured by the city and they allow you to do the work. It took us a while to get there. We had to do several things to kind of get everything in place and finalize the plans. Originally we were going to build 21 units, so we changed the plans and we had to go through a couple of different areas to extend the plans because we were running out of time, and then change the architectural layout. So we worked closely hand in hand with the architect. Probably the biggest thing on that one was figuring out the environmental survey for what the bedrock of that was. So when you're developing something that's going to go up a few stories, this is 6-story building, you need to figure out what your foundation is, right? And the area we were building in has like mixed reviews of foundation. There's some bedrock and some soft marshland. So we needed to figure out how or what the land was beneath our actual existing building, which was quite challenging. I mean, we had to shut down the road originally to do it, and when we tried to do it, we realized that there were like power cords running through the building or through that piece of the sidewalk, and the city wouldn't let you go 6 feet in either direction, which forced us to go to the street. I can tell you it is not an easy job to shut down a street on a busy city. Just some of the fun challenges we had. We wanted to shut down the road and we went to go work with the city, but we found out it was a county road. And that's a whole entire different process to shut down a county road than to shut down a city road. And even though we did all that, when we went to go finally dig and we were about to, we had the road closed and a safety plan for where the traffic to divert and the people to divert because we have to bring in all this equipment to figure out the item. We found out that there was like a major water line that also had requirements where we couldn't dig. And we had this really small area to dig in. And the engineer said it was too risky. We had this amazing lesson on, wow, that's something really unique. We have to make sure we know when we dig into the city. Just to tell you how we resolved that, right? We ended up cutting a hole in the back of our building, bringing in all the equipment and digging inside the building, right? So we pretty much cut an entire hole on the back end of our building, and they took apart this big machine that digs the hole and brought it all inside, and they reassembled it inside and dug a hole right in our basement. But it was a long process to get there. And again, this is how you learn, right? You go through the process and you start learning everything you need to do when you're looking at learning and getting into these areas.
I like it. You don't take no for an answer. They tell you cannot dig there, you just went inside of the building. Okay, we'll figure out the solution for it. And that's what you have to do in this world. Tell us a little more about the timeline on this project. Like, what do you expect to, break ground, and how long will you expect to be development phase, construction phase, and what is your projections for this project?
Yeah, so it's an 18 unit. We're looking at about $5.5 million in hard construction cost, another, let's say, million and a half in soft costs, right? So insurance, GC bills, all the other kind of hidden fees that are there that you have to handle every day, right? So all in, we're roughly, let's say, $8 million. Right now, we're finalizing the final plans, which will allow us to go to the city. Like I said, we have that bond with the city, and once they approve, we're looking to have a shovel in the ground in 6 to 8 weeks. The one thing we're waiting for right now is we're finalizing our either debt. So we've met with a couple of debt and equity groups that can do both the debt and the equity, or we're exploring options with certain local banks that said that they might do 100% construction, which is unique, but it's unique to us because we already own the land and we've already have sunk cost in the architecture and, the GTA fees, the lawyers, right? We've already kind of done all that with our own capital, right? So we're in a unique position where we have equity already built into the business. So the bank might consider doing 100% financing for the rest because, we're roughly close to like $1 million in already.
And Do you need more capital for this project? Do you look for investors at the moment?
Yeah, and that's kind of what we're trying to figure out. We actually have a meeting Friday, because we were looking at some city incentives in terms of building or having the building be a little bit more on the lower income side, right? So there were certain grants and opportunities that we wanted to finalize just to see, do we need to go out and get equity? We'd love to do the entire project ourselves, right? It takes a layer of responsibility and paperwork out when you're able to do these projects, with your own capital in a smaller group of people. But it's going to have to be based on a certain factor. So right now we're just flirting whether we should go get equity. We're probably looking at like 1.5 million in equity if we go, and what that looks like has to do with how much debt we're able to get and what our debt looks like, right? Or like I stated, is debt going to be able to go in and fund the entire project, right? So there's a couple of options out on the table. In the next few weeks, we're going to put them all on the table, do an alternative of analysis, right? What's the benefit of this one? What's the, what's great about this one, right? What's the pros and cons? And then we'll figure out what best fits us in this project, right? In terms of the risk we want to take, the people we want to get involved in the timeline.
If some of our listeners want to learn more about this project and about what you do, would you be open to talk to people about this particular project and maybe possible investments?
Yeah, man, I'm willing to be open book here. I mean, we can definitely circle back and we can talk all about some of the issues I've gone through with here and everything we're learning. I am documenting the entire process so we can be ready for the next one. And that's kind of the goal, right? But yeah, there's a lot of steps here, and I'm learning a lot. There's some nights where you're up trying to figure out all the different pieces, and there's some other times where there's a lot to learn. So yeah, we're definitely happy to share everything we're going through and kind of have people just ask away at any questions they have, right?
Okay, so we will leave your information, how people can reach out to you, in the description of the video below. And from what I understand, this project and what I like about this project is it's on busy street in Newark, New Jersey, one of the busiest cities in New Jersey, right? One of the best cities in New Jersey, and it's already in the final stage of approvals. So you're waiting for the final stage approvals from the city, going back and forth for a long time, and now you're ready to break ground. You're almost ready, almost there. So you're not going to the project that just bought the land and just trying to figure out what to do. If someone wants to invest, this is a unique opportunity to go already on the halfway to the finish line. And I think it's very interesting for people to explore. Before we go to your social and to information, for some just beginning their own path of progress in real estate, what's one piece of advice you would offer to them?
Get around the right group of people, right? So, and I'm going to talk about our my mastermind group that I get around, right? But it is really important to get around the right group of people that have this growth mindset and that are constantly just in this learning, right? I mean, we talked about it a few times on the show, Alex, right? This is an industry where it's ever changing, right? If you think you're going to go in, learn everything once, and be successful, you're not going to be successful for long, right? So you have to constantly be in a growth mindset. It's a it's a marathon and not a sprint. So you got to get around people that have this mindset of you're constantly growing and evolving. Amazon was a bookstore before it became the Amazon we know today, right? Um, Similar to this, right? My path started on fix and flips, right? And fast forward, I'm talking about prop tech, right? I didn't even know this was an industry that I could break into, right? I didn't even know how to leverage that, but you constantly have to be growing. And a lot of that has to do with being around the right group of people.
Cannot agree more. Surrounding yourself with like-minded people was crucial for my own personal success, and everyone we had on this podcast had the same stories. That surrounding yourself with the people who can elevate you, or improve your day-to-day operations in one way or another, or even give you some ideas how to improve it. That's cost all the time that you can spend on it. Miguel, it's been amazing hearing your journey and the innovative ways you're approaching your real estate investments. Thank you for sharing your expertise and inspiring our audience. I really appreciate you coming up today.
Thank you. Thank you, Alex. It was a pleasure meeting with you. Look forward to doing the next one.
Of course, hopefully next one we're gonna share your success story of finishing this project in an incredible speed, and everyone will be happy on your investments, and you'll make many more. And next time we have on a call, you're gonna have two more projects. So you're breaking ground, and we are looking forward to hear your success story. To our listeners, thank you for tuning to the Path of Progress. Don't forget to subscribe, leave a review, and share this episode with anyone looking to start to grow their own path of progress. Until next time, keep moving forward.